Good morning, all. Welcome to this week update. I was unavoidably absent. Last week I couldn't do an update, but this week we are back again. Now we are going to look at our instruments and what to expect in this market. We are fast approaching the end of this. This is DXY on the weekly time frame. We are fast approaching the end of this trend and to begin to come to the downside. The previous week I talked about grabbing the liquidity, and that is what we are still trying to do. The liquidity that exists between the base of this candle here, or we can say right from this top to this point, or this point. Yeah, this area, the price had been moving quite nicely, and we could get stalled before we break 111,200. Any moment from now, we are very close to where we expect to see reaction. And having said that, of course, you don't want to blindly begin to put a big lot size to sell DXY from here. You have to wait for reaction, at least a 4-hour time frame reaction before we begin to look for that sell. But we believe strongly that within the frame of 111,200 to 110,500 or 600, we should see that reaction. So this area, 110,700, 110,500. This is 110,500, 110,700. Without breaking 111,200, we should see that reaction. So what are we seeing in the, at the moment on the weekly time frame? We are seeing the emergence of the ending structure, the wedge. So if you draw the head of this weekly candle and you draw to this one, so you can see the wedge. You take a trend line, you draw it across like this, and you can see that wedge closing, and that is what we are seeing. On the daily time frame, we are seeing right again, this may just be the last probably this may mark the last correction. Yes, this may mark the last correction they're going to see before the bears, before they take over. So after this last correction, we may just go one more time to break the top, and we'll begin to come to downside. So we are looking at this may possibly take next week, and by the end of this month, we may be coming down to the downside. So let's look at the daily time frame, what it gives us. So on the daily time frame, looking at these, that we had said that this is the big three and this is the big four, and that these also had ran like a 1, 2, 3, 4, 5 to the upside. We saw this as possibly like a 1, or let's say like a 1, a 2, a 3, a 4. Yes, 1, 2, 3, 4 here. Then the last 5 of the 5 wave is what is throwing itself into an ending structure. That is what I can see here. If I may come again, in this wave itself, we are seeing 1, 2, 3, 4. And this is supposed to be the last wave 5 to the upside. In that last wave 5 to the upside, we can see the first move, the second correction, the third, the fourth correction. And the last 5 waves of that last 5 is what is throwing itself into an ending diagonal, or a leading diagonal, as the case may be, because most likely this is going to shoot beyond. So in this leading structure, which start from here, this is the first move. I see this as 1, this as 2, this as 3, and this as 4. So price may not break this area before it goes up. So this has become an area, 108,600. It has become an area for price not to break in the interim. So we are seeing this trying to go up again and probably finish off the last structure to the upside, breaking this top in a similitude of a leading diagonal before we begin to come to the downside. That's what I can see on the daily. On the 4 hours time frame, it's going to be messy. So that's what I can. So if I bring out, what I said, so we can see that this now becomes, a very big support for price to break. So breaking this support of 108,500 to the downside, then we will seem to be going bearish again. So we can see the development of the wedge, that is, before us. So we'll be waiting for that reactions to occur. And if you go on the 4 hour time frame, like what I said, what I'd explained, so you can see that we had 1, 2, 3, 4, and the last 5 waves, you can see 1 and 2, a 3, and a 4. So the 4th wave has ended here. So we see that this is breaking to the upside and to go up to finish up with the last, without breaking these supports. Anytime we will come to take this trend support, then we are bearish. So this going to the euro dollar is the same thing. Euro dollar is very tricky, very, very tricky in its own pattern. Very, very tricky. And this what it's been doing. Of course, the parity also is expected between here and this area. Yeah. So that's where we expect for this to grab liquidity between here and this space here. So, but the way it's running, we had thought that we may get to parity. We may not get to parity, judging from the way this is running. But then we have to take it as it comes. We cannot. Parity from this point is about 200 pips, if I'm correct. Let's see. Parity, yeah, is about about 180 pips parity. So we should be watching around this area because it can take a turn any moment from now. Of course, the wedge also is forming from here to here, and the trend resistance around this area. So we can see that this is giving us a wedge, and anytime, we expect also that it's going to turn to the upside. If you are looking for a sell, it's not yet time to buy. So if you are looking for a sell, we have to look for a sell with cautiously look for that sell. On the daily time frame, what do we see? It's the same. So it's the same. The 3rd wave, the 4th wave here. The 3rd wave, you can see the first 1, 2, 3, 4, and the 4th wave. So in the last wave also, we can see 1, 2, 3, 4, and then in the margins of the ending structure of the last 5 waves, you can see 1, 2, 3, 4, and this may just be the last to the downside. This may not actually visit parity, so we have to be aware of that. I think the DXY is going to lead us. So once the DXY reacts at about 110, 700, then we should know that the euro dollar also at least a good buy. So I still expect that this is going to come to the downside one more time. We may not do more than 1618 here. But whatever it gives us, we are going to follow. We're going to take. And when we come back here to break this area, that's, we are done selling. They remain the resistance. Now, top resistance will be broken. Breaking this resistance to the upside connotes a bullish scenario. Now let's look at Nzdusd USD. That also, we have to wait for reaction. We have to wait for reaction. We have to wait for reaction. It's the structure is messy, at the moment, very, very messy at the moment. It's also wedging out. So it's also wedging out. For now, we are almost at the base. We may chase this level here. Price may just do that, and price doing that may mean that from the current level, we can't see the reaction of the bulls yet. It's still very corrective. So from the current level, this is about 67 to 70 pips. Price may even shock you. May shock you. Either come here without breaking this level here. Without breaking this level. So price may do from the current level, price may still do about 100 pips before we see that reaction. So, but we're going to get that reaction. So they will continue to waste time here. It's not yet time for price to move, but we are approaching that level. So this remains the resistance to be broken for us to confirm where we are going upside again, 5.6, or let's say 5.700. Yeah, 5.700 area. It's place to break to the upside. So once we break that, we are bullish. The next one we are going to talk about is pound USD, pound dollar. Pound dollar, let's see what pound dollar is doing. Everything is looking like pretty much the same. So in the pound dollar, what structure I can see that this one is trying to build right now. It's trying to build, the structure has, slightly changed. We were thinking we're going to get a running flat, between A, B, and a C. In this A, and this is a B wave to the upside. We have A, B, C of a B wave or X, and these probably will be running, like a running flat to go to the upside, as we know that pound dollar liked to run a running flat. But what we are getting here, it's like we're going to see a break below this point here. We should be expecting an extension, an expanded flat for pound dollar. So if we get a reaction around this area, let's see, from here to the base, it's giving us of this Y structure, has given us a 1, 2, 3 here. So 1, 2, 7. So this is giving us an extension. So what we should expect now from here is price to play this. Price most likely is going to play this for us. And that is where to expect. So if I bring this up here, any moment from here, around this area, between this area and this area is to expect this to get to. So you can take your chance around that area. Yeah, I might use this as a last bus stop. So we are going to be checking the price. Price is going to break this one now. Price has changed the structure slightly, so you can recalibrate and see this going to the downside. So and see it find support around this area. This is a very good place to look for that support. This is a very good place around 1.1800. 1.1800. So that's where to expect that reaction. So without breaking 1.1700 or 17, yeah, 000. So that's where to expect that reaction. So the next one is gold. Gold, before we talk about dollar yen, and we're going to rest there. So on gold, gold has taken a bullish scenario. We are taught that we could still see a WXY playing out, and that is not what I'm seeing at the moment. Gold, it seems to be taking a very bullish scenario. We are taught that this will be an A, B, C, or B, and that we're going to be falling to the downside from here. But after we see a 1, 2, probably the third wave, and that is not the scenario we are seeing. We are seeing a bullish scenario where you can see price at form like test this resistance at 27.25 about 3 times now. 1, 2, 3. That's what we are seeing the third time. And so that is a very bullish scenario. So what we are seeing at the moment is like this may just be like a flash to have grabbed liquidity under this low, and will just give us this correction alone to the up to the downside. And this may just be a one. Sorry, yes, and probably yeah, a 1, 2, 3, 4, 5 to the upside of this first move, of the first wave. Very corrective in its appearance, and this may just be the second wave to the downside. 1 and 2 to the downside. Now if the price should come and take this low, 25.86, then that's when you should think that is possible again. But I don't, that is very remote at the moment that we're going to be seeing a second leg to the downside, very remote. So we are seeing this move to the upside at a 1, 2, 3, 4, 5 configuration. So that's a very motive wave, and that maybe we are about to see a correction of this run from here to the upside. So if we go to because there's not even the weekly candle structure is still very bullish. I'm not seeing anything bearish here. On the daily time frame on gold, on the daily time frame of gold, this is what I said, that may just be a 1, A, B, C of the second wave, and this remains where price should not even here. This is where price should not break for now. 25.96 or 25.97 remains a very, big area for price not to come down to. And these also may have done like a 1, an A, B, C of 2 here. So this looks like the second wave. Now, in the internal structure of the third wave, this may have done a 1, 2. This may be a 3, 4. And if this is a last wave, then we should have a big correction in case it's going to give us a big correction of an ABC of this run from here to here, ABC to the downside without breaking 50 or 61.8 retracement of the old movement before we see the upside again. So if we get that, this may remain an area where price should not even come to touch, or perhaps this area here, this area at 2657 may be a big place for price to move past. If you go on the 4-hour time frame, I think I want to use the 4-hour time frame to bring out the drawing for us to align. Yes. So this is the 4-hour time frame. So we are seeing this move here at a 1, which is, this is like a 1, 2, 3, 4, 5. Then we saw this as an A, B, C of the second wave. And this is internal structure of the third wave. The third wave may have ended here because from here to here at form more than 1618. And we saw this reaction, an A, B, C to the downside. And with this A, B to the downside, we are seeing a 1, 2, 3, 4, 5 move to the upside again. You know, so a 1, 2, a 3, a 4, we are told that this is the fourth wave. So let me bring out the drawing for us to align. Now, bringing out the drawing to align. So we may still technically think that probably wave 3 has not ended. Maybe wave 3, this 3 is ending here. In case this 3 is ending here, this remain a place for price not to break beyond. Yeah, because that might still be a fourth wave around this area. So around between here and here, this looks to be coming down. You know, if it comes down here, then we are done with this completely. We are done with this completely if we come to this area, because this would have been the fourth wave. This wave looks completed now with this move. If we had bounced up from here, we would have taken this as the fourth wave of this move for one more push to the upside before we correct big. But what is happening here now with the break of this low, except we see the bulls take over again, we may come to the downside around this area. So if we see reaction around this area without breaking this area, and that now will be taken as the fourth wave. So this 3 comes here, this 4 pushes up around this area, then we have the last 5 wave before a bigger correction of ABC. But once we break this area, because once we break this area, then this area here becomes the target for us to see more upside. This area of 50 retracement, that's 26, 54 or 26, 55, and 26, 38 remains in an area to look for that push again to the upside. So it's a bullish count that we are seeing. I can't see anything bearish here with the move that we had so far. And if you are on you're a position trader, your move should have been from here, trying to hold here and say you want to move to buy from here, might look very, very counterproductive for you. So we may see this come down. If you don't get reaction around this area, we may look for long, not here now. We may look for long around this area. So if we get a long position around this area, we can take a small risk, and with your stop loss around it, just a little around it, maybe about 0.2 around this area, and to see if price is going to go, in case you're not watching. But if you don't see a 4-hour price action around this area, then this is the next destination. So you can look for your buy around this area. So that will mean that we are seeing a bigger ABC in this zone to go up. Now, with that said, let's look at dollar yen. Dollar yen. So that will be my last dollar yen. We had been in this move for quite a while on the dollar yen. So, of course, we saw on the longer time frame also the way this wedge builded, this was like a 3, this was like a 4 on the weekly time frame. Okay, so if I go back there again, so we had seen this move as an A, B, and a C. The move that started from here, yes, that was around 2011 to give us an A, to give us a B, and a C. In this a C wave, of course, we said this is a wave 1 and a wave 2 and a wave 3. Should I come again? A wave 1, a wave 2, a wave 3, a wave 3, and a wave 4. With the wave 3 and wave 4, we saw the emergence of the ending structure here that wedged up. And we can see, the way it beautifully, carved itself out here. We had a 1, 2, a 1, 2, a 3, a 4. And within that 4, we saw a 1, 2, a 3, a 4, and a 5. So which ended it. So we are about seeing the same thing, playing out with the last 5 waves on the DXY. So we saw the first move that could have given us an A structure, an AB, and for us to come to the downside to see a C wave. So we'll see as this comes to the downside if it's going to take this low or not. So taking this low will be a big deal now. So if it takes this low and break this low, it may actually be giving us a very, very, very big correction by breaking this low. That will be a long thing to do for now, but for now we're going to take this that we are in the C wave to the downside right now. So let's look at the weekly time frame and let me zoom in. So on the weekly structure, we can see that this is trying to close, this price action here. We may have formed the top right here. We had a long consolidation, 1, 2, 3, for like almost a month. We consolidated around this area and price peaked here. So the price may not be going to break the top again. So what can we expect here? Now, we may have done, finishing here because the B wave also went up as a 5-wave structure. So from here, a 1, a 2, a 3, a 4, and this is a 5. So if you don't see that again, so let's say from the bottom here, a 1, a 2, a 3, a 4, a 5. So this is where we thought it could end, but, they played around structure here, broke off the downside as if they're ready to go with this big move. And again, the price went back to the upside. But for now, breaking this 4th wave here, and the 4th wave had been broken here to the downside by here, we saw this reaction. It has not closed. Also signified that the bears, once again, are on board. So we should be looking for a sell, except something else changes. So where we will see our stop loss or resistance for now, it's around this cluster. We may come a bit to the down or upside here. So 15800 will be a top place for price to go and take. If you are looking for a short position, you should be looking in this area of 157264 on the weekly time frame. But going to the down, scaling down to the daily time frame, will give us a better idea. On the daily time frame, like I said, on the weekly, what does it give? One more time, I think 1572 something. I said, yeah, 157, around 157,220 area, 157,220. So scaling down to the daily time frame, which will be better. So we are seeing it around 157.46 something. So which pushes the price a bit up. Now we are seeing the recovery and the reaction from the bulls here. So this may be an A wave. We'll wait for a B wave to form and a C leg. Then from a C leg, we can short this. If we get a decent pullback here for a B wave, you may long this to the resistance and sell from that resistance. On the 4-hour time frame, so we can see the 2 daily close, 1, 2, yeah. So the fourth wave had been breached here, had been breached here. Of course, we are heading towards the zone of resistance to sell again. So these are pushed in. So between this area, 157 and 157.461 is to look for yourself. So on the 4-hour time frame, we had seen these breaking down at a 1, 2, a 3, a 4, a 5. Now, a 3, a 4, a 5 may also mean that a 1, a 2, and the third wave may just have come down. We might be going up as, a correction of the old, a 3, 4, 4, 5, or, trying to correct wave 2 of the third wave. But I think it's more of trying to correct the old, because this is where you should be looking for your resistance now, around this area, between this area and this area on the 4-hour time frame. So bring it out, my drawing. So let's look now. The area where we have this pink, these are the areas you should expect the price to come to. So we are seeing this developing into an ABC of an A wave. We may be getting reactions here to correct the B wave and push up again. So if we have a decent correction here without breaking this support here at 155,400, then we can look for a push to the upside to buy a C wave. Then from there, around this zone, come to the downside. With that, I've come to the end of this. So you can see the wedge here, the way price also broke down from the wedge. We are thought probably it could go a bit up, pick up a sell from just right up here, but definitely they wasted more time here to create this wedge, and we had a fall. So see you the coming week. Bye. Do like, subscribe, and share this